Markets, though, this morning, the major swing yesterday, Jim, and then I assume you think the bulls like a goose egg on retail sales here?
Yeah, but I have to tell you, yesterday was some poorly positioned people, even at some major houses, some hedge funds. A lot of guys were short calls, got completely crushed. They thought that when they saw the number, kind of not unlike what Lloyd Blankfein tweeted, which is if you had the number, you would have just completely been run over. Lloyd, come on, man, I miss you. And it was just one of those times where the big boys were wrong, and they got caught. And now we get this number today, retail. They may stay caught for a little bit, but there's no doubt about it. To me, if you're trying to figure out S&P earnings for next year, they're lower, and the price earnings multiple will be lower. So this was a little, this was a short squeeze. Let's make everyone know it was a short squeeze. But then you have very good bank numbers today. So it makes it so the short squeeze is a little more painful because there really were. I even have, I know people are slagging Morgan Stanley, but they did have some great money flows, good pre-tax margin and wealth, did the biggest buyback. The Wells Fargo quarter was magnificent. Charlie Scharf's back, the Charlie Scharf that we know as being the genius who is able to make a ton of money. Mm-hmm. He's doing it. Jamie, very low key, just doing a very good job when it comes to mortgages, traditional business. City's hard for me, a little impenetrable. But we used to start with Wells and say they were great. And then you had all these problems with Wells.
Yeah.
They're going away.
The charge on some of the regulatory matters, but you're right about net interest income beating, revenue ahead. Provisions on credit, provisions $784 million or so. Yeah,
and look, I will say, what Charlie does better than anyone is he quietly makes it so that the head count goes lower. The net interest income is just extraordinary here. And I really, really felt that, you went from 265,000 people when it took over the bank. It's down to 240,000. I think you can take out another 20,000. $2 billion charge. Yes, he had to do that because there's obviously issues with regulators. But the expense structure here is going down so fast. And the quarter-to-quarter net interest income was up 19%, quarter-to-quarter. This is the one. My travel trust owns it. I was so happy. I was like jumping up. I said, it can't be this good. Charlie could not have delivered this good a number. And he did. Yeah. And those of us who remember Charlie at other situations were just waiting for this quarter, and we got it. And this is the breakout Charlie quarter.
Kind of feels like we're in that moment where you're getting a lot of income boost because of rates, and yet not huge danger signals on delinquencies.
None. One of the things that Charlie's making it very clear, I think he'll make it very clear today, is where are the delinquencies? He's being careful, but there basically are none. And remember, one of the things that people have to understand if you're a banker, if you buy treasuries with the money that I put you in deposit and you give me nothing really to speak of in deposit, that's what you make. And they're doing it. Now, look, J.P. Morgan, net interest revenue went through the roof. This is an unbelievable number. Morgan Stanley expenses miss, but they had no big loan losses. So I look at these numbers. J.P. Morgan only up 61 cents. Come on. Unless Jamie Dimon says we're burning down the house, which is a 2-year song that my daughter likes very much, I think that's going to be fine. But it's Wells. Charlie and I have been. Sometimes we're back and forth. Yeah. This time, no.
Shepard Smith here. Thanks for watching CNBC on YouTube.